Bitcoin on the 30-minute chart looks like it's gonna break out any moment from now. Now, what I think will happen, I'm gonna explain this in this video with reasoning, is that we're gonna go up first and then go down. So this is Bitcoin on a 30-minute chart. We can see a falling wedge, and a falling wedge, so we're going downwards, pointing downwards, usually breaks up towards the upside. And right now, obviously, Bitcoin here on the 4-hourly is trading alongside this major support line. And we've been supported here multiple times. And right now, it comes down to the next level of support. Are we going to go up or are we going to go down? If we break down from this major support, I think we can go down quite a bit, and eventually we will go down. But let me explain why I think we might actually go up from here and the support will hold again. So, first of all, if we look here at Bitcoin, we've seen that we had a falling wedge last time and we broke down. And that is the main reason I think we're gonna break down again, because we are still in a bear market. And the same thing happened last cycle. So 4 years ago, if you look back 4 years ago, and I showed this last time, we also broke down. Let me show it to you guys again, because we have new viewers every single time, right? So let me refresh this briefly and show you guys, because last cycle the same thing happened. You can see here, if I zoom out, this is the last cycle. And we can see that we had the top and we went down, and then we had the first wedge. We broke down from there, had the second wedge here, broke down again. And now if you go to this, sorry, one sec. If you go to this cycle, the same thing happening. We had the top, then we had the first wedge, broke down. Sorry, not falling wedge, bear flag pattern, forgive me, bear flag pattern. Anyway, what I'm trying to say is that we had this pattern, which is a bear flag pattern. And the flag, you can see here, the flag is basically just like this, and then you go down. So you have the bear flag pattern, and we're repeating what we did last time. Now back into what I was saying. Why do I think we go up? Well, we're going up right now, and I'm going to give you more points, but 81,000, which is the previous low here of the last bear flag pattern, is, in my opinion, a zone that we could be retesting. Now, another reason we're going up is the CME gap. The CME gap is formed over the weekend, and these are the gaps here over the weekend between the Friday close and the Monday open that are usually filled. Most of the time they're filled, like over 90% of the time they're getting filled eventually, rather sooner than later, but if not filled right now, they will eventually get filled according to history. So the gap right now at the top side, so the point that we have to fill is at approximately $84,000. And we right now started going in that area. Now, I think obviously we're going to go to 81, but there's a chance that we go all the way to 84, according to the CME gap. And a reason why I think we go up, now we get into the main reason here, is if you look at the Bitcoin funding rates, and they are negative right now. So what does this mean? The Bitcoin funding rates indicate if more people are right now short, which means they're predicting the market to go down, or if they are long, which means they're predicting the market to go up. If more traders are short, the funding rates are negative. This means that if you have a short position right now, you have to pay the long position holders. So it's usually a very small fee, but it adds up over time. If you have a short position, like I said, every day or every 8 hours, usually a certain percentage of the value of your trade, you have to pay as a fee to the people that have a long position. And if it's negative, it means more people are shorting. So to balance the market out, there's the negative fees, and the long position holders are being paid. If more people are betting that the market goes up, then the fees are positive. So the people who are betting that the market goes up will pay the people that are betting the market goes down. It balances out. So right now, more people are betting that the market goes down, and we know that usually the opposite happens. Usually the market tries to punish the most traders. So according to this, I think that we will have another leg up, fill that CME gap that I mentioned here, at potentially 84, if not, go at least to 81,000, go a bit higher, and then eventually break downwards. Now, last thing to note is if you just look at this chart, this is on the daily, so this is the target zone where I think we're gonna start going down from. So anywhere from, like I said, here from these levels to all the way to like $84,000. So anywhere between right now and $84,000, which is the top of the CME gap, which I mentioned here, is where I think we're gonna start going down. And another point to note is if you look at the liquidation heat map. Now I want to make these videos very simple for everyone. So liquidation heat maps are telling you at what prices, so the very yellow lines, it shows you at these prices, a lot of people will get liquidated on their positions. What does this mean? If I have a short position, so I think the prices will go down, then if they actually go the other way, at a certain point, my position will get closed because I use leverage. I use money that is not mine from an exchange, and the exchange wants to limit the risk. If I get too much into the negative, they say, okay, you know what? I will close your position forcefully, take back all your money, and that is the liquidation price. So let's say I think the price will go down right now, then my liquidation price will be above my current price. At a certain price, my losses will be so high that the exchange will say, I close that position. That's my liquidation price. And usually, the exchange makes money from that. The exchange wants you to get liquidated. I'm not saying that the exchange can manipulate the price directly, but these prices tend to be filled, or they tend to be reached. Like I said, usually most traders get punished by trading. And that's why I personally do not like trading short term. I'd rather trade long term plays. So trading the bear market or trading the bull market, and not trading what's going to happen tomorrow. And that is, in my opinion, very much gambling, because there could be someone like Trump coming out and saying something, and then we go in the other way. So we right now, back to the point, we can see that there's a lot of liquidations at around this level, at around $80,000. And this suggests that we are most likely going to go there, tap this point, and then go back down. Now, that is it for Bitcoin's analysis. Finally, last point to make is that actually Trump has made a statement. So they were supposed to have the second round of peace talks in Islamabad yesterday between Iran and the US, and Trump has cancelled it. He has basically said that I cancelled the trip for my representatives going to Islamabad to meet with the Iranians. Too much time wasted on traveling, too much work, besides which there is tremendous infighting and confusion within their leadership. Nobody knows who is in charge, including them. Also, we have all the cards, they have none. So of course he's trying to power play here. And if they want to talk, all they have to do is call. Okay, let's see what that means. I mean, we know that Trump does not necessarily need the exchange of Hormuz to be open. They like to be in control, and they also have their own crude oil which they can be selling. But the local governments here, of course, they want crude oil prices to go down, the markets to open up again so they can make money. We know that in Europe, especially, I've read news that jet fuel is very much in a shortage, and flights have gone up in prices a lot. So of course fuel has also gone up tremendously. And with that being said, I hope you guys enjoyed it, and I see you guys tomorrow. Bye.